The world's largest alternative asset manager just announced it's launching a publicly traded company to buy AI data centers. Tens of billions in capital, sovereign wealth funds backing it, and they want to let everyday investors in. Blackstone isn't just investing in AI, it's becoming the landlord of the entire AI infrastructure build-out. And the stock is down 15% this year. Blackstone manages $1.3 trillion. That's not a hedge fund. That's a financial empire spanning real estate, private equity, credit, and infrastructure. And right now, every single one of those divisions is converging on one theme: AI data centers. In 2021, Blackstone acquired QTS Data Centers for $10 billion. Since then, QTS has expanded 14 times over. Its leasing volume is up 50% year over year. It now has a $70 billion portfolio and a $100 billion pipeline. QTS alone makes up over 20% of Blackstone's real estate trust. CEO Stephen Schwarzman said digital infrastructure has been the largest driver of appreciation across Blackstone's funds. And the company's own research says the top 5 hyperscalers will spend over $700 billion on data centers in 2026 alone, with $2 trillion projected over the next 5 years. Blackstone saw this coming before anyone else. Now they're scaling it. Here's the move that should get your attention. Blackstone is launching a publicly traded acquisition company that will buy already built, already leased data centers. Not land, not development projects. Operating assets with tenants locked in on 15-plus-year leases. They're raising initial capital from sovereign wealth funds, then opening it to retail investors. The goal: tens of billions in deployed capital, making this one of the largest data center REITs in the world. It would compete directly with Digital Realty and Equinix. This is Blackstone democratizing access to AI infrastructure. The same assets that pension funds and sovereign wealth funds own, now available to anyone with a brokerage account. If you believe the AI data center build-out is a multi-decade cycle, this vehicle is designed to let you ride it. But data centers aren't the only play. Blackstone is building around the entire AI power stack. They just acquired advanced cooling technologies. Because data centers generate massive heat and need cutting-edge thermal management, they extended a $10 billion credit facility to Australian startup Firmus Technologies for AI-focused data center expansion. And their Energy Transition Partners Fund is buying power grid components, environmental compliance companies, and electrification infrastructure. Blackstone's thesis is simple. AI needs data centers need power needs infrastructure, and infrastructure needs capital. Blackstone provides the capital and owns the physical layer underneath all of it. Their own 2026 outlook says $106 trillion of global infrastructure investment is needed through 2040. 75% is in digital infrastructure, power, transport, and renewables. Blackstone is positioning to capture the largest share of that spend. Now the risks. Blackstone stock is down about 15% year to date. The broader market sell-off and rising interest rates hit alternative asset managers hard because they rely on cheap debt to fund acquisitions. If rates stay elevated, deal economics compress. The data center build is also getting crowded. Every private equity firm, every REIT, and every sovereign fund is chasing the same assets. Competition drives prices up and returns down. And if AI spending disappoints, if the hyperscalers pull back, the demand assumptions behind a $100 billion pipeline start looking aggressive. So what's the chaos capital take? Blackstone at current levels is a bet on 2 things. 1, that AI infrastructure is a multi-decade cycle, not a bubble. 2, that the firm that owns the physical layer underneath AI captures durable long-term cash flows regardless of which AI model wins. You're not betting on which chatbot is best. You're betting on the fact that they all need buildings, power, and cooling. And Blackstone owns the buildings. Everyone fights over which AI company wins. Blackstone doesn't care. It owns the real estate they all rent. That's the most Blackstone move imaginable. And it might be the smartest trade in the entire AI revolution. The capital markets are chaos. Embrace it, and I'll see you in the next video.